So you want to have the PMI pulled off of your loan. The PMI is your private mortgage insurance on your loan. What this is actually just protecting the lender against potential default. So once your property has achieved an 80% LTV or greater, meaning you owe less than 80% of what the current market value is, you're going to be eligible to have that PMI removed. What you've got to do is go to your lender. You've got to talk to them and understand what the next step is. Generally, what's going to be the next step is to have an appraisal done. They will order the appraisal. If the appraisal shows that you've got 20% equity or more, you're going to be eligible to have that PMI removed. You generally have to submit a little bit of paperwork, and then that PMI will be removed. If you have an FHA loan, you need to know the FHA loan PMI will stay with the property in perpetuity until it is either refinanced or paid off. So if you've got an FHA loan and you're wanting to get rid of the PMI on that, we're going to need to do a refinance regardless of the equity or LTV. So in a conventional loan, you are going to have the best chance right now of eligibility. The only other caveat some lenders have is that you've made a certain amount of payments. They want to make sure you've been in that loan for a certain period of time before dropping that MI. They don't want the market appreciation to be the sole reason you now have this amount of equity. So they want to see oftentimes 2 to 3 years of payments before being willing to drop that MI. But that's on a case by the lender. So don't hesitate to reach out if you got any additional questions on this. It's a fairly easy process. Make sure you truly feel or believe or get a second opinion that your equity amount is at the 20% plus number before paying for an appraisal to be done. Because you're going to be the one paying for that. And if it works out in your favor, boom, that's when we're going to have the PMI removed.